Hi everyone, Paul Lange from Disciplined Trading Strategies with this week's Trade of the Week video. This is the week ending 2/2 of 2020. The date this happened was on 1/31. That was actually Friday. This is actually the last trade of the week for me. Entered at about 10 minutes to 10. The stock was V as in Visa. This is based on a Tier 2 novice gap. It was an entry on a 1-minute secondary sign of weakness, management simple, and reward to risk about 1.9 to 1. Before we look at that, as always, take a look at the free stuff this week. Nothing. Enjoy your week off from the free stuff at DTS, but do look for some educational emails that will be coming in your email this week. This is the daily chart of V, and this is what it looked like pre-market before the stock opened that day. I knew it was going to gap down. It was looking to gap down right to about there. And then after the day was over, it looked like that. Notice it ran up that topping tail. I shorted up in that topping tail. This is one of the faves this day for sure. We'll take a look at how the entry came about in just a minute. The 60-minute chart was important on this one because it wasn't real clear exactly how far it may run up after a gap down, because the daily chart was a little questionable as to exactly what it might do. The hourly chart was a little bit helpful in that we did clear some areas in there. You can see when it opened there, trying to run back up into those areas, that minor resistance area, it got whacked and started to fall again. The 5-minute chart gives you a view of the stock for the whole day and exactly what happened in a bigger picture. The entry we'll see a little bit better on the 1-minute chart. That's where it gapped right there. And then the entry came right in there just after the first 20 minutes of trading. I was considering looking, thinking maybe going to try and get it on the way up, but it dropped kind of quick when it dropped. I wasn't real clear where the top would be, so I ended up waiting and then taking a secondary sign of weakness right in that area there. Good job on the targets. Target 1 was right there. You always want to grab something on that morning drop because you always come back late morning. Not always, but a lot of stocks do. And if you don't have anything, then you are in jeopardy of giving up the whole trade. I take something there, and then when it comes back, I feel confident to just let it go. This one rolled over and then, of course, fell hard into the close. A little note on that, this stock, and I had 2 other shorts this day, I was not at the screen after 12 o'clock, basically. I maybe peeked in once to take a look, but I was gone doing other things, having fun. My philosophy is to work hard in the morning, try to find the high or low for the day, and then to let 2/3 or half the position go the best that I can. Not every day works out perfect. This day did work out perfect. I had 3 shorts, and either all or half of each one of those was taken into the close, and they all worked. So it actually made for a nice week, so to speak, on that one Friday. This naturally depends on your style to some extent. There are different styles, but what I want you to be careful of is that you don't sit there and manage to your detriment. Remember, if your stock hits your target, any management you do along the way costs you money. We usually manage either to try to increase overall odds, or the bad way to manage is when you're trying to appease your psychological shortcomings, and that's the bad thing to do. So I like not being there for part of the time. In general, it works out very much to my favor. A second thing I want to point out about this one, I'll flip over to the 1-minute chart and you can take a little better look here at the, that was target 2, right into the close. Just I walked back in about 20 minutes before close. I actually want to get there at 3:30. I was a little bit late, and it was amazingly just coming off the low of the day right then. So I trailed it right to something just off the low there. That last target you can see there was 198.52. This is the 1-minute chart, and you can get a little better view of the entry there. I wasn't able to get it up in here, which I would have normally liked to have done. I took it underneath there, underneath that area right there. And then the 2 targets, of course, are not even on this 1-minute chart because they go off the chart there. Another thing I want to mention is sometimes people look at a $200 stock and they say, wow, that's a high price stock. I don't know if I can fit that in my account, or if I want to tie up that much capital. But it's the math of it that matters. And this actually only tied up $16,000 in a 4-to-1 account, because as the stock price increases, typically so does the size of the stop. So proportionally, it's not any different than trading a $10 stock that has a proportionately sized stop. What really affects your capital that you burn is the volatility of the stock compared to the stock price. When you have a very low volatile stock, and you can have a tight stop and a very expensive stock like IBM, that's something that ties up capital, because you can do IBM sometimes with like a 20-cent stop. So here with $1.50 stop approximately, even though it's a $200 stock, that's really no different than if you had a $50 stock with a 40-cent stop, etc. So don't discard these, because actually it comes out nicer having an expensive stock, because with less shares, you don't have to worry so much about getting as many shares, and also a little bit of slippage on a $1.50 stop, a couple cents of slippage really doesn't matter where it does on a 10-cent stop. So don't discard these, do the math and figure out on each individual trade if it makes sense for you. That's it for this lesson. As usual, these are done in the DTS Trading Room. If you are able to be at the screen for even a couple mornings a week, I suggest you come try us out. This is Paul for DTS. Good trading, everybody.